Hi, I'm Jessica Amir with the Finance News Network. Joining me now from Centuria Industrial REIT is its fund manager, Ross Lees. Hi, Ross, welcome back.
Thanks for having me, Jessica.
Thanks for coming. First up, just give us an introduction to the fund and tell us about your strategy.
CIP is Australia's largest ASX-listed industrial investment vehicle. We're focused on owning high-quality assets in great locations near motorway networks. Our portfolio of 39 assets comprises $1 billion of portfolio value. And our strategy is to provide predictable income to our investors with the opportunity for capital growth.
And some stellar first half results. Ross, just walk us through some highlights.
We had a great first half. We're off to a good start this financial year. We're really underpinned by leasing in the half. So last financial year we generated record leasing across our portfolio, and in the 6 months to 31 December we've already eclipsed that result, delivering 159,000 metres of new leasing across the portfolio. What's really pleasing for me and for our team is the fact that we retained 100% of tenants in the half.
And Ross, who are your customers or your tenants?
Our portfolio really accommodates some of Australia's best known household names. We've got a mixture of private, public companies, and to name a few of our majors include Woolworths, Australian Wool Handlers, Visy, Greens General Foods, or even Aurora.
And just walk us through the types of properties, where they're located, and just a little bit about them.
So we own warehouse properties around the country. We're very well geographically diversified between New South Wales, Victoria, Queensland and Western Australia, with some smaller holdings in South Australia and the ACT. Our assets have an average size of about 20,000 square metres, and they're really accommodating to those high quality tenants that we just spoke about. We've invested $122 million during the half year. We bought 3 properties that adjoin existing sites that we already own to give them better scale and future optionality. And we bought another asset that we considered opportunistic in Western Australia during the half as well for $11.2 million.
And Ross, just tell us about the key metrics of the fund.
So our occupancy is 95.9% and our weighted average lease expiry is 4.9 years. We reduced our gearing over the half to 40.6% and our interest cover ratio remains strong, 4.1 times.
Now walk us through trends you're seeing in the industry and how that's flowing through to the fund.
I think the key things we're seeing in the industry at the moment is the changing technology driving our tenants' behaviour and demand from end consumers of goods to have rapid delivery times. So what's important for us is the location of our assets and making sure they can respond to those consumers' needs for end products to be delivered to them very quickly. So we're looking for assets that are located on key road networks and key points of infrastructure. We believe our portfolio is really well suited to meet those trends.
And Ross, just lastly before we wrap up, what's your guidance for the second half of this financial year?
So today we've reiterated our guidance of 19.5 to 20 cents per unit of earnings for FY18, and we're expecting to distribute 19.4 cents per unit. That translates to a distribution yield forecast at 7.6% for unit holders.
Well, exciting times, Ross Lees. Thanks so much for the update.
Thanks again.